So, hello everybody. I hope everybody's having a great day wherever you are, whatever you may be doing. No trade calls, no recommendations, responsible own stuff here for educational purpose only. Doing another one of these Substack videos. We'll take a little bit of a look at USDJPY today. So basically, just stepping back in terms of the bigger picture, if we look at what are the key kind of reference points on the monthly, you could see you've got this low here at the 180 key break that started this whole downside move, kind of double bottom here, broke outside this previous resistance on the monthly support. They tried to smash it down. We broke out and we're ripping higher, right? So now there'll be people arguing that this is just a little bit of a consolidation between a move higher, or other people saying, well, we're trying to put in a little bit of a head and shoulders here, and then we're going to break lower. Now, one way I'd want to look at this is just you have to factor in a little bit of what's going on in Japan with the BOJ and whatnot. So basically here, we've been playing this quite well. We got all these moves down quite nicely. We covered our shorts around the 140s, mid 140s, and now we're just waiting to see if we can see ideally a rip back higher towards the 160 into year end to short it again next year. But time will tell. As always, price will be guiding. What I would be looking at here is, of course, the probability of a hike in October, very, very low. Probability of a hike in December, I think, is pretty much 40-50%. The new PM's advisor has said that they'd be okay with maybe a little bit of a hike in December, but it's really data dependent. So I think here, of course, it really depends also on what happens on the U.S. equity side, because if we do get a little bit of flush on equities, we might get a little bit of a correction down here. But technically, what I would focus on here are the following levels. Okay, so to the upside, clearly 160, 155 are those previous BOJ intervention levels, and it would be surprising. Something really crazy would have to happen to see us trading back above that 160 very aggressively here. So at least something would have to change. And what's interesting is, even if you look at this in terms of an upside channel, right, you could see that you've got this move here, you've got a lot of support coming back in. If you start to flip in some moving averages, the 100-day, the 200-day, you've got a big cluster of moving averages here. So right now, the way I would focus, I would be looking at this is anything that happens inside this broader zone or inside this this channel is really much to do about nothing, right? I would look at this downside level, so that cluster of the moving averages and the bottom end of this channel, kind of as a turn point. Now, this is a 2 standard deviation channel. If you want to be a little bit more a little bit more aggressive, you can flip this into 3 standard deviations, but I think the two standard deviation is fine here. And right now, I think the market is looking for direction here at the 152. I wouldn't really be concerned about BOJ intervention. In terms of intervention, what's far more important is the rate of the rip rather than the actual level. Of course, if we start to get into 160s, that's a bigger deal. But I think you won't start to hear any verbal intervention unless we start hitting 155, or if we move extremely aggressively. I think where you have to start to worry about that kind of risk is much higher up, right? Which is either you're looking again 160, 155, or basically even just 157, 160. That's what I would be looking at. So right now, to me, I wouldn't be focusing at an inverse head and shoulders pattern as we highlighted on the monthly. To me, that becomes a real possibility if you start to see this channel breaking down very aggressively and you start to get clear daily closes, weekly closes below that channel. If not, the way I would be looking at this here is still that this is trying to continue to move higher back into these bigger levels. Now, we do have WADA in Washington this week, so again, we might get some kind of headline risk, but for now, that's the way I would be looking at it. Again, in terms of much bigger picture, right? if we break the 160 and something crazy happens, well, then the next thing you'd be looking at is 180s, right? This key psychological level. There's not a lot of room all the way back into that. I think that's not a possible, that's not in the cards yet, but that's what you would be looking to the upside. And if you get some kind, something, the BOJ starts hiking aggressively, then of course you'd be going back and looking at those 125s. Those are the big risks in terms of bigger picture. But right now, chances are we still stay semi-range bound into the end of the year, with most of the risk being to the upside. Of course, it could change on a headline, right? But that's the way I would be looking at it for now. Okay. Hope this was useful. Wishing everybody an awesome one. Thank you. All the best, guys. Bye-bye.